what I'm going to do today is to share with you one of our strategy called Bullish Force Strike. So this Bullish Force Strike, that is to be used in a bullish environment, and there's also a bearish Force Strike to use in a bearish environment. For simplicity, right? And also since the market is bullish right now, I'll just be using the Bullish Force Strike strategy later on for simplicity. Okay, and along the way, I'm going to share with you guys a lot of examples as well. Of course, then I will have to go through the basic first, right? What is the price action bar? And then we'll go through the execution signal. That means this is what we mean by EXE. When I use the word EXE, it is another word for confirmation. Confirmation. So when you see this signal, it means that it's time to click the button. Whether it's time to click the button, right? We call it confirmation. Right. So every strategy needs in PEM requires a confirmation. So this is the confirmation that we are looking at. I'm going to teach you guys later on. Right. I won't be entering like crypto trades. I'll be just entering looking at US stocks. Okay. My target, I aim to enter at least two today, right? At least 2 US stocks today. Also depending on the market condition, because market now is at all-time high. So actually it's not so easy to find new setups actually. But I think there's still some that we can explore later on. Okay, later I'll show you guys how I do my screening, and we're going to handpick some strategy out to enter. Okay. And also I'm going to share, like, even though I'm not going to enter crypto, right? But based on what you guys will be learning today, the Bullish Force Strike strategy, there are some crypto examples that I actually prepared for you guys to see. Okay, even though I'm not going to enter them anytime soon in this webinar, but they are forming a potential bullish FS structure. Okay, for learning purposes. So I think there's 4 examples later on, right? Okay, so it's going to be very interesting. Okay, for those of you who are interested on how I apply this, not just in stocks, but also in the cryptocurrency market. And I'll be using my IB live account, my actual live account, right, to do screening and entering the trades. Okay, so that you guys can really see my thought process, why I put that why I entered at this price, why I put my stop loss, and so on. Okay, and also we're going to go towards the end of the webinar. As usual, we're going to go into live Q&A as well. Due to time constraint, I'm just going to cover stocks, US stocks, and just entering US stocks, even though I do also talk about crypto. But actually what you guys will be learning in the PEM Mastery program, right, also consists of Forex, futures, and even you can use it in Hong Kong, China stocks, Singapore stocks, KL stocks as well. Okay, all these markets can be used as well. I've Indian students using trading Indian Nifty stocks in their home country as well. Even though I don't trade that market, they will still tell me that it's the same, Elson. The manipulation pattern that I teach works the same. Okay, and I believe this is the same for even, let's say you're trading the Nikkei 225, right? You're trading in other countries, in different countries, right? I believe this manipulation pattern works the same in your country. Let's go into some context before we look at the strategy. Okay, so this is basically the trading process, right? Firstly, you're going to identify bullish FS is actually one of the strategy that you're going to learn in the PEM Mastery package. In total, we have almost like, I think, 5 variations of strategies. Bullish FS is one of them. Bullish FS is one of them. We have 5 variations of the price action manipulation strategy. Okay, bullish FS is just one of them. Okay, so whenever you identify a setup, a strategy structure, for example, the bullish FS, right, you need to look out for this thing called confirmation, or EXE. This is what we call signal to take action, right? To click the button, when to buy. This answers the question, when to buy, to click the button. And before you buy, we need to do this thing called risk management. Later on, I'll be risking about $1,000 for each trade for demonstration purposes during this seminar. Okay, so I'm going to share with you guys how I'm going to structure them based on risking $1,000 each for the trades that I've found later on. So for bullish EXC, we'll be looking out for bullish pin bar, markup bar, ice cream bar. Okay, and then conversely, if you're looking at bearish strategy, you'll be looking out for bearish pin, bearish markdown, bearish ice cream. Okay, in candlestick analysis, right, there's like 20, 30 candlestick pattern, but over here, there's actually zoomed down to only three. Three up, three down. So it's actually very condensed already, guys. It's really very condensed. Okay, so don't tell me it's a lot. Candlestick analysis, you got like your Marubozu, Harami, engulfing, piercing, three back crow, and many more. I learned that before last time, right? But I zoomed down to only three important ones. Okay? So of course you need to understand this. Every bar that you see, right? Okay, usually it's red or green. Of course, sometimes it may not be green, it could be a whole body that's white color. It's also considered like a positive session. Every bar will give you the information, this information. Open, high, low, close. Every bar will give you this open, high, low, close information. Okay, so if it's a red bar, it means that the opening price is higher than the closing price. Okay, of course, the highest price of the bar is got tail, no tail, got body, no body. The highest price is at the highest point. The lowest price is the lowest point. Got tail, no tail, got body, no body. Okay, range means the difference between the high and the low. The highest point to the lowest point, we call this a range. Okay, we call this a range. Understand? So if the bar body is white or green, it means that the closing price is higher than the opening price. Okay, high minus low is the range. Understand? So this is really very basic. Every price action bar will give you this open, high, low, close information. Okay. So execution signal with the bullish and bearish, right? That I mentioned just now. So let me go through the bullish one. Anyway, for those of you who think that it could be certain things could be a bit more technical and faster, right? You have to bear with me. Okay, I try to give this as a crash course for this webinar because market going to open at 9:30 p.m. later to about, and I will be looking out for setups from 9:30 p.m. onwards. So I do my best to cover as much content as I can before we go into the charts. Okay, so don't worry if you are a new student. A lot more will be shared. A lot of examples will be shared further during the when you enroll into the PEM Mastery course. Okay. So bullish pin bar. When I draw a line across, guys, it means that the bar body can be red or green. Doesn't matter. When I draw a line across, slanted line, it means that the bar body can be red or green. Doesn't matter. Okay. The most important is that the open and close of the bar is above 1/3 of the bar range. Okay, for bullish pin bar. So for bullish ice cream bar, we want to see that the bar body is about half of the bar range. About half. It must also close above 1/3 bar range. So bar body must be half of the bar range, provided it also close above 1/3 of the bar range. So this blue line here is like the this is the 1/3 range, upper 1/3 range. So the bar, as long as they close above the 1/3 bar range, it will fulfill the bullish ice cream bar. Okay, if the bar body is more than 2/3 of the bar range, right, and it also close. Usually, if the bar body is 2/3 of the bar range, it will definitely close above 1/3, the top 1/3 range. Agree? If the bar body is at least 2/3 of the bar range, the bar itself will definitely close above 1/3 range. This is just mathematics. Agree? So we call this a bullish markup bar. Okay, so either one of these appear will be your confirmation signal, or we call it the EXE. Understand? It will be our confirmation signal to take the trade. It doesn't mean that one is better than the other. To me, all is the same. As long as they appear, these are my signal to take action. Either one of them appear, is my signal to take action. Okay? We'll go through more of that later on when we look out for the setups. Okay? So there's going to be two contexts to trade. I'm going to, as I mentioned, going to focus on just the bullish setup. Okay, the bullish setup. So I'm just going to look at the bullish EXE here. In the pair mastery course, we'll go through more in details the bearish side as well. Okay. So for bullish FS, let's say today I'm looking out only for bullish or setup, right? Because now the market is still bullish, right? So I'm going to stay long. There's two contexts that I'm going to trade the bullish FS. So the bullish FS, the setup is up to 6 bar formation. It's a price action formation up to 6 bars. But it doesn't mean that when I see this 6 bar bullish FS up to 6 bars, that means it can be at least 3 to 6 bar. When I see the bullish FS formation, it doesn't mean that I just buy. I only trade it, right, when I only consider the setup only when it fulfills either one of these conditions, or both also can. Uptrend retracement, we call it the context. The first context, uptrend retracement test 2050 SMA. Okay, uptrend retracement. Okay, so what I usually like to see is that before this bullish FS form here, this blue circle is where the bullish FS would form at the 2050 SMA. This one, the price action must be above 50 SMA in uptrend retracement. Whenever we talk about uptrend, right, it means that the price action must be above 50 SMA. The price action must be above 50 SMA whenever we are talking about uptrend. Okay, so in this case, right, the bullish FS, what I want to see is this thing, right? I call this the parallel downside price action. There must be some form of parallel downside price action first before the bullish FS form. Example, the price goes up, then I want to see some sell down first, then the bullish FS form at the 2050 SMA. Understand? So that's the meaning of the parallel downside price action. I don't want to see that the price action goes up and then the bullish FS here, then the 2050. The price action goes up, then there's no parallel downside price action, and then the bullish FS forms here. I don't want to see this. I want to see some form of sell down first before the bullish FS form. That's why this is part of our criteria. Later, I will emphasize this again when we look at some of the setups. Okay? And take note, this must be above 50 SMA because we are looking at uptrend retracement context. Okay? How about the false bottom scenario? False bottom is essentially we call this a bear trap. For false bottom, basically, essentially, we are talking about a bear trap pattern. A bear trap pattern is technically bullish. A bear trap pattern is technically bullish, guys, because bears are being trapped, and usually it's attempt by the market maker to take out the stop losses at the key swing low level, SL. Okay, so when I see that the price comes down and goes up, right, I want to see that the bullish FS forms here in this blue circle here. The bullish FS. Okay, the EXE for the bullish FS must close at or above this support level. For now, you guys can just take it as support level. My students in PAM, they will know this as LP level. Okay, but for now, you can just take it as it's a support level. Okay, so take note, guys. Bullish FS in false bottom scenario, we can trade it above or below 50 SMA, basically anywhere. It doesn't need to be above 50 SMA. It doesn't need to be above 50 SMA. It can be anywhere on the chart. So if you are just trading bullish FS false bottom, you can just remove all your SMA. Understand? Okay. So take note, uptrend retracement context, price action must be above 50 SMA. False bottom context, up the entire formation does not need to be above or below 50 SMA. It can be anywhere. Okay, can be above or below, doesn't matter. This is the two contexts that we're going to look out for to use this strategy.